Welcome back, folks. Greg Silverman, your alternative investment scout, scouting out the gold and silver market for y'all. So here's an article that everyone liked and shared from last week. And so we're going to have it as part of our Come Learn With Me session. And guys, if there's anything particular you want me to do or feature on these Come Learn With Me sessions, please let me know. Drop me a line, send me an email, WhatsApp me, text me, hit me up. Okay. Are gold prices on course to break all-time highs once again? Perhaps, dear Watson. All right. Gold was one of the star performers throughout much of 2020, but with concerns over the impact of the coronavirus abating throughout much of 21. The bullish sentiment for the yellow metal had decisively cooled off by the third quarter, but today, with the strain of COVID threatening to send much of the world into a restrictive state once more, will the safety that gold has historically offered during such times of crisis elevate its price again, perhaps even eclipsing last year's record highs? Gold remains among the world's most recognized safe haven assets during periods of market turmoil, and investor interest in the precious metal tend to soar when there is more uncertainty and more potential volatility surrounding traditional financial markets, such as equities and bonds and crypto. Oh, no, it doesn't say crypto. See if you're paying attention. We'll highlight that, okay? That is normally the case. This was certainly apparent in 2020 as the coronavirus pandemic panicked global markets, particularly during the first quarter. By early August, the bullion's price had reached an all-time high of 2,067 per ounce. Wow, it remained, touched it for a brief second, if I remember now. Early August, that's August 2020. It remained distinctly elevated about 1815 ounce throughout much of the remainder of the year. As the world steadily recovered from COVID-19 throughout much of 2021, gold retreated from those elevated levels. US President Joe Biden's administration's enormous $1.9 trillion pandemic relief package at the beginning of the year, for instance, was a major factor in sending gold prices lower, with the yellow metal falling significantly from around 1950 per ounce in early January to below 1,700 ounce by the first of the week of March. I'm shaking my head because, you're creating a $1.9 trillion out of nowhere, and it's a major factor in sending gold prices lower. Huh? That doesn't make sense to me, right? Printing another $1.9 trillion of cash, gold prices should go higher. There's more money chasing less gold. Okay. But anyway, be that as it may. And although accelerating inflation and fears surrounding Delta variant of the coronavirus saw prices surge back over $1,900 per ounce by June, gold has failed to ascend to such highs since then, spending much of the time below $1,800 per ounce. According to a June analysis from Canadian bank TD Securities, this lackluster price action has suggested the lack of an immediate impetus to buy yellow metal. Gold did climb above 1850 in mid-November. However, with the surge in inflation in recent months prompting gold investors to turn to the bullion to hedge against rising prices. Okay. So gold went above 1850, it says, to hedge against inflation. So did I read that right?